So let's start off by having a look at the pound versus the euro. I'm not going to do all of the different charts today. I'll probably just do the pound, euro, pound dollar, and euro dollar. And also I will tell you a little bit about a projection that we've got for the pound versus the dollar, and show you a bit how we add significant percentages to our clients' bottom lines using our projections. So right, the pound versus the euro, we can see we've surged nicely today. We were as high as 119.82. We've pulled back a little bit, currently trading at 119.65. My previous technical analysis video, I cited 119 to be the area that the market would probably pull back to and act as support. The reason that I cited that level is because I knew it had acted as resistance a couple of times previously, and when you break out of a previous resistance level, the market does like to come back and test that level. As you can see, it's acted as nice support. If we can get back above 120 over the course of the next couple of days, that will be indicative of further strength ahead. So we will continue to monitor that as it plays out. Moving swiftly on to the pound versus the dollar. If you recall, the pound dollar has been in a downtrend, as you can see, encapsulated by these two lines here, making a nice channel. We broke out of the top side of this channel last year, December. And then January and February, we've come back down to test the top of this resistance area. Similarly to what I just cited in the pound versus the euro, you break out of resistance, you then come back and test that resistance before heading higher. At the beginning of the video, I mentioned we've got a projection I wanted to tell you about for the pound versus the dollar. So we are within the next 3 to 6 months expecting to see the pound versus the dollar rally back up to around the 140 level, or certainly between 135 and 140. That seems quite ambitious at the moment. Obviously, the way that this can help your bottom line is because the difference between where we're trading now and 140 is around 8.5–9%. So if you're looking to hedge currency now compared to hedging it at 140, you'll be adding an extra 8.5–9% to your bottom line if you can sort of hold out, or if you layer your forwards. And I can give you some key levels that we've got laid out for our clients who are looking to layer forwards. So feel free to get in contact with me and we can have a discussion about that. Let's zoom in to a daily perspective. So as I mentioned, since we broke out, we've come and tested the top of our channel. So once, twice, 3 times now. Crucially, we haven't broken back below that channel, which says to us that there is still some decent strength in the market. Providing we can get back above 130 over the course of the next couple of days, then we will be optimistic of our projections playing out. Probably the first level that we'd want to see taken out is this 132 level, and then we've got a couple of other levels plotted that we'd like to see taken out above 132. Again, as I say, if you'd like to discuss that, then do give me a call, send me an email, and I can have a chat with you about your dollar exposure and how you might be able to add maybe 5 to 10% to your bottom line using our projections and our hedging tools. So let's move swiftly on to euro dollar. So obviously, since the beginning of February, the euro has been getting battered by the dollar. We've had sort of a straight line descent up until the last 3 days. We had a nice little rally. My thinking is this is probably just a pullback, a little breather in the market before the dollar then continues to resume battering the euro essentially, and we'll probably head back down to the bottom of this channel, which is roughly in line with 107. So we will continue to monitor that. It's worth noting also from a very macro perspective, the euro dollar has been trending down since, what's this, 2008. So for the past 12 years, essentially just under 12 years, this market has been in a downtrend, as you can see encapsulated by these lines here. So you know, we probably won't get to the bottom of this channel anytime soon. It might take another year or two for us to get all the way down there, if we are going down there. If not, then we could see some support at around 105, which is where we saw support previously around 2015 and 2017. But all in all, this market is in a downtrend, so it's worth noting that. And let me just zoom back in. Oh, what's happened to my chart? Okay, chart's messed up a bit there. But long story short, bit of a pullback, still expecting to see some downward momentum, and then we may sort of head back up to the top of the channel and then continue down again. So I think that will do it for today. Just wanted to give you a quick insight into how we're seeing the markets, and also to give you that little projection, well, quite a big projection actually, on where we see pound dollar going and how we could possibly add close to 10% to your bottom line with that one. So if anyone would like to discuss that, as I said, do get in contact. I'll be happy to have a consultation with you and see if we can help you to manage that exposure. That's it for now, guys. Keep looking out for future videos, and have a wonderful rest of the week. Take care.